Of Sean. Look
Good
at this.
morning. Good morning, everybody, and welcome to the Daily Energy Markets Forum where everybody is a different color. Uh, Thanks to the
Can,
magic of lights. You see these lights I have.
can we say that on live TV? Is that allowed?
Yeah, yeah, it's all allowed. Brent crude oil trading this morning a little bit down. We've got $63.10, but still on a somewhat of a recovery since the big sell-off on Friday. I'm going to take the opportunity of having these three powerful women on the session and some with deep experience in the Middle East region to get some thoughts on the news of the day. Kate Durian, MEIS contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. I won't label the number of years that you have been covering the Middle East crisis, born into it with a family from Jerusalem, and now multiple decades later, we're seeing Donald Trump describe this as yet another new dawn, another new beginning. Your thoughts in the sort of immediate frame of time, 2 years literally into this slaughter in Gaza. Is this the end of it, or how do you feel this? Is it a pause? We've seen the Israelis pause before and go back in even with more savagery. Your thoughts on this moment?
I mean, it's a good thing. We've seen these poor hostages released. They were, I think they were really innocent hostages. They had nothing to do with the war. They were just there for a peace concert, but at the same time, there was no talk about, the tens of thousands of Palestinians who died. I will believe
And
it
who
when I
are detained in Israeli prisons without charge.
yeah. I think there is, and I mean, the reports I'm seeing today is Hamas is still there with their guns and they're attacking, other Palestinians who they suspect of either being, collaborators or who have been stealing aid. So I think the situation in Gaza is just so fragile until you get this sort of so-called stabilization force or whatever it is to monitor a ceasefire and make sure that there are, and I mean, let's not forget, Israel still controls more than half of the territory. As I said, I'll believe it when I see it. It depends on Donald Trump's commitment to this deal. He wants his Nobel Peace Prize, and if all falls apart, he ain't going to get it. So I think the price of oil, I think it had factored in because, everybody expected that this peace deal would go through because he was behind it. Now it's the tensions with China. So I think and the increase in OPEC production, because I think we saw nearly 200,000 additional barrels come on the market. So I think, we are in a place where fundamentals are pretty, balanced, and the price is going up and down on the whatever Donald Trump says or what China says on, tit for tat sanctions. So I think that's where we're at the moment.
Karen Ackley, president of the Arab Energy Club and CEO of Crystal Energy. Carol, also from Lebanon, and this moment in Gaza, where the bombs have stopped dropping for now, at least, we're still seeing stress in the West Bank, where Israeli settlers and institutional military figures are continuously pressing the sort of encroachment onto Palestinian territory there. Lebanon is bombed nearly every day. I'm wondering, from your thoughts, bombed by the Israelis, that is, where do you see this moment? I know you're not a geopolitical analyst at the core of your expertise, but your expertise does reach in many centers, and you are of the region. Just from a historical perspective, having lived through multiple turmoil in the region, does this feel like a change moment?
Oh, well, Sean, I mean, I love history and especially the history of the region. And I also have, as you said, the experience of being Lebanese. As I was born, I grew up in the civil war. I have the feeling that today, of course, what happened in Gaza, given the horrible scenario, what happened over the last 2 years, It's definitely a milestone. We were all waiting for this moment because we've had enough of innocent people being slaughtered. And not only that, even those who were not killed were a bit luckier to survive. The economic conditions that those people were living under were also terrible. So anything which is an improvement over what we had in Gaza recently is already a milestone. However, it would be naive to say that that's it, we turned the page and now we're going to all live happily ever after. There are structural problems that remain unsolved, and I really doubt that they would be resolved overnight. This is a problem that has been ongoing for decades. And there is, I have to say, when there are innocent people who were killed, people don't easily forget. It takes generation to overcome these kind of atrocities. I mean, the children, especially Palestinian children, who saw their parents slaughtered in front of their eyes, they are not going to suddenly feel happy because they now have a little bit of peace in their region. So we shouldn't be naive. Of course, it's a moment to be celebrated because the atrocities must come to an end, but it does not mean that that's it. We should forget about what's happening from now on in Gaza and assume everything is okay. The problem with the human beings is that they tend to forget easily. But this problem, it's not that, it's stealing the headline from other important issues that we have in the region. We should continue to focus on the conditions in Gaza for the Palestinian people and also on widening the peace process across the region, because I really would love to see the Middle East having a lasting stability. Coming from the region, I don't have a long memory of anything which has lasted more than a year or two without a problem erupting here and there in the region, because we're not tackling the root problem in the region when it comes to geopolitical stability or lack of it.
Malia Bengali, founder, MB Commodity Corner. Malia, just sort of taking back the lens to the sort of wider global macro, these events and developments in Gaza of the last few days, signed on to yesterday in what looked like an international sort of peace treaty. I'm not sure exactly what you would call it, but essentially signing on a paper to indicate something is stopped for now. But yet the oil markets, the energy markets, the global financial markets are relatively unengaged in this problem or in this solution. Your thoughts on whether it does indeed have any kind of macro ripples to the wider world, to the wider markets?
Thank you, Sean. In terms of what's driving the macro markets right now, I hate to say it's probably not those specific headlines. I think there are bigger worries to talk about. China and US tariffs have come back to the forefront in terms of what is the US plan to do. There's a bit of a negotiation tactic where China is trying to export bans on rare earths. As you know, rare earths is a very critical resource for making electric vehicles, defense, missile systems. So there's a bit of a tiff going on between the two of them. It's probably a negotiating tactic. On top of that, the biggest concern in the market right now is this massive spend on AI and CapEx and large cap valuations about how much of the CapEx spend will actually materialize in profitability. Then we have the central bank in terms of dollar and the Fed policy rates. So there's so many bigger concerns right now the market's trying to grapple with that I think this is taking a bit of a back foot. I mean, those are the three drivers of where asset prices will go. We can talk about gold and silver, what's happening. So I think there's some really big macro events unfolding right now, which are driving prices. Going back to oil, I think, as Kate very well pointed out, I mean, supply is picking up slowly by OPEC. Demand is tepid, so oil really is in no man's land. It's done nothing, but there is no sort of a shortage on supply, so to speak, to get the oil price higher, unless we see some sort of capacity being taken out. But that's not the issue.
Kate, just picking up on that, when we look at where we're going into the fourth quarter, we've seen oil prices stuck in and around plus or minus $65 a barrel. We're currently a little bit below that. It seems triggered by the big sell-off last week on concerns that China and the US trade war could escalate again. Your thoughts on where OPEC Plus is in all of this? We had their meeting last week or a week ago or so, sort of continuing with their supply increase. We've got reports in the last few days that OPEC Plus production tangibly increased by over 600,000 barrels a day last month. Your thought, that's the OPEC secondary sources report, that could OPEC. So these are tangible barrels. There's some question about, does these quota increase represent actual tangible supply increases? They do, and they are continuing. Your thoughts on that strategy and its sort of impact going forward on the oil markets?
Well, I mean, you've got to be a mathematician these days to look at the numbers, and the number that they say they're going to increase, 137,000 barrels, and then you look at the overproduction by Kazakhstan, for example, and that's continuing. It's like assessed at about 300,000 barrels over their quota. So how do you do the math? There's supposed to be compensation from Iraq. Are we going to get it fully? Now, if you look at the paper barrels, on paper, it looks as if you might get a 60,000 barrel addition, given the increase in quotas and the compensation claims. So it's really hard to tell. I think, we're getting into a period where demand is slowing. China is basically holds the key. So any headline to do with China, you see a price falling, because they really have been basically holding up the market with buying up for strategic stocks at this price. And I think some of your speakers before have said it, they will probably continue because they are strategic buyers these days. They are no longer the China that used to buy at any price. So I think at about 63, we will continue to see stocks building, and that's going to weigh on prices. I think the EIA said it recently in their medium-term report that they do expect a surplus. I think stocks are building. So that's going to weigh on prices. I think you've mentioned several times the spare production capacity. I think the CEO of Aramco was speaking yesterday in London about spare production capacity and how they intend to maintain 12 million barrels a day. And that's basically by bringing on offshore fields in order to relax some of the older fields that they're producing, so they keep it in balance. But it keeps it pretty tight, and I think secondary sources don't expect them to have as much spare production capacity as they say, or as people would like them to have. And so because that basically Saudi Arabia holds the bulk of global spare production capacity that can be brought on, within 3 months and maintained. So now there are doubts as to whether they can maintain it. And that probably will sort of keep a floor under prices. It won't really be, bullish, but it will probably prevent prices from falling too low because our spare production capacity is shrinking.
Carol, your thoughts on that, sort of the not so much about Saudi or UAE, which we know has both the financial means and the commitment to continue to sustain their production capacity and maybe even grow it further in the case of the UAE. But what about the rest of the OPEC plus countries? You engage a lot right across the countries of that network. Their ability to continue to invest in new capacity or even to maintain current capacity levels. We've seen that African members of OPEC plus struggle with that. Where do you see the rest of that OPEC plus group and its ability to maintain their investment in capacity?
Well, if we want to think about expanding capacity, you have to think about investment, and we have to think about who is leading that investment. So you mentioned, Sean, the African countries, Nigeria and other smaller players in that respect. Of course, they do have the potential. It's not that they don't have the resources. Actually, if I think about deep water and ultra deep water resources, I think Nigeria ranks in the top in the world, if not number one on some of those resources. But the problem is the cost of production, and the problem has always been investment. And investment is not just driven by prices. There are other important, because everybody's exposed to the same price everywhere. But the above ground factors, primarily government policy, play an important role, especially when you are relying to a largest extent on international capital. So Saudi Arabia, you have Saudi Aramco, but in other countries you do have international international players who have the choice of allocating their resources elsewhere. And in Nigeria, we already saw some exodus of the big players. Even they were there for decades. It's not suddenly left, partly because there are better opportunities elsewhere, and also because of the investment climate in Nigeria is not that attractive. So in that respect, I don't know, when people talk about expansion of capacity, where will that come from? Unless we see drastic changes in above ground factor, I don't see that coming. Now, outside the core members of OPEC, even when I think about the OPEC plus, Russia, for instance, Russia is struggling these days in terms of expanding its production because of the escalation of the war with Ukraine and the Ukrainians intensifying their attacks on the energy infrastructure in Russia. So that also will affect its ability to expand its production, even though it is an important player within OPEC plus, and actually its production is not far from that of Saudi Arabia. It does not have the same luxury as Saudi Arabia. It is not a swing producer like Saudi Arabia. So if you just draw or plot the chart in a chart, the production profile of Saudi Arabia and Russia, you can easily see the flexibility that the Saudis have, which Russia does not have. So outside the core GCC members, I would say there is limited capacity expansion. That said, Iraq,
What about
for
just
example,
maintaining current capacity? I mean, Nigeria, amongst others, have struggled just to do that.
Exactly. And that's because even maintaining that capacity requires continuous investment, because you do have natural decline in field. So it's not just about adding, even expanding, because it's not like planting a palm tree. You have to continue to keep on investing in existing production. But Sean, I want to mention something about Iraq, because Iraq seems to be eyeing even further production expansion when it comes to getting a bigger quota from OPEC and OPEC plus in general. And this is where I see a potential, because Iraq relies heavily on international companies, which has invested a lot in the country, and they have the resources, the reserves, the low cost of production. So I would keep my eyes on Iraq in terms of production increase, because this is where we have seen the most material development. But let's see how they will negotiate that within OPEC.
Malia, just looking at the demand side of this equation, and as we started out our conversation, that the big drop last Friday was due to the sort of appearance, if you like, of this trade face-off, trade war between the world's two biggest economies, the US and China. It's back front and center as being sort of with a knife edge to it. Yet we haven't seen so far this sort of dreaded consequence of the sort of Independence Day or Liberation Day, whatever Trump called it in April. The big tariff war began, and yet the ramifications that were the sort of end of the world ramifications have yet to land. Your thoughts now of this reemerging China-US face-off? Is this now the moment where the rubber meets the road on this, or do we go forward, even already Trump sort of tackling away from it being a face-off?
Sean, so basically a lot of the demand in anticipation of the Trump tariffs was pulled forward to the first half. So when people look at the economic numbers in the first half of this year for US GDP or other sort of countries, it looked very strong. So the economy, the global economy is slowing down into the second half of this year. A lot of the demand is front-end loaded. Having said that, if you take a look at China actually did a lot of stimulus to sort of boost their numbers as well. We saw some pretty good, decent export-import numbers. But we think our view from the macro point of view, our indicators suggest that the US economy is slowing down. It's holding up, it's robust. But if you take a look at that on top of the tariff pressures, we think we could be in a bit of a stagflationary environment, which actually hits oil demand. And China, as we spoke about, is actually buying oil strategically, not because they need to, because they're just storing for the future, and prices are interesting, and that is actually offsetting the supply increase from OPEC. But there are a lot of moving factors. We also see Saudi gets a market share at the cost of Iran and Russia as well. So the oil market is balancing itself out, but the demand is not strong. So if you take a look at gasoline or distillate or naphtha, some of the products of the oil market into Q4 this year, manufacturing PMIs are weak. So we're not seeing a resurgence in manufacturing, which is actually impacting distillate demand or diesel for that matter. So demand remains tepid. On back of that, supply, unless we see a actual recession, prices won't drop too much. Or if you go below 55.
Where does the Fed go with that? We saw a Fed increase or decrease rates last month. Yes. And now we're not far from the next Fed moment in a month. Where do you think they go with this?
I think the Fed should not be cutting rates. They are actually being coerced by a weaker labor market, which had a seasonal one-off. So they have a dual mandate. Either a labor employment has to be strong or inflation. They've actually looked at some weak data and they got really worried and they cut rates. This is why gold, silver, and all these hard assets are rallying because of the Fed is stoking inflation. The US economy, real GDP SAR is around 3.2%. There is no need to cut rates right now. Obviously, there's a lot of pressure from the administration to cut rates, but given the US interest expense is not the $1.2 trillion, but the Fed should actually be staying on hold because you are basically stoking inflation and hard assets and raw material prices. Take a look at copper, other sort of precious metals, palladium, platinum. They've skyrocketed. So inflation's back on the, there's no way they're behind 2% inflation. If anything, Fed should be on hold. If they do continue cutting, all commodities will rally, and that's what's happening to the market right now. But oil is the lesser of the two, right? Because supply, commodity markets need a tight market. So copper, which is tight, is rallying more. Platinum, palladium, gold. Oil has a lot of supply, so it's rallying. It's not really moving, right? So it's getting offset by that. But the Fed is what they do at the end of the month will be very, very important for asset classes because they should not be cutting, and they are being forced to cut.
Let's go to the survey question and get a slightly wider view on this idea of new beginning. Trump calls Gaza ceasefire a new beginning. Do you agree or disagree with that? The point on that new beginning, Kate, and the idea of where does it go from here? When this started some time ago, both the sort of the Abraham Accords with the sort of first Trump administration, where brought in a number of Arab countries into a peace alignment with Israel, and then in the Trump years, or sorry, the Biden years, we had just before this events in Gaza was the idea that we were going to see an economic corridor from India through to Europe, coming through the Middle East, through the Gulf, with Saudi Arabia joining this Abraham Accords, and all of this sort of big picture stuff that was essentially nearly a counter to the China Belt Road Initiative, and Saudi and Israel and the US seem to be very close to bringing a lot of things together. Your thoughts on where all that goes? That's come back into the headlines in recent times, obviously for the opposite reasons, the Saudis saying there's no way they'd do any of that now. But your thoughts on where that goes, because I would imagine that Trump has all of those things in his mind.
Yeah, I mean, new beginning, but new beginning of what? You know, when you see
all what I've just described, back to the India Middle East deal.
Yeah, but that's going to take years, and you really have to stabilize the region first. And then what I read yesterday, watching the speech, the endless speeches in the Knesset yesterday, was that basically Netanyahu is interpreting the US stance as sort of giving him the red light, the green light to annex the West Bank. I mean, there's so many moving parts that still need to be resolved. Look at how they've changed their whole view of what was going to happen to Gaza. It was going to be a resort, you know, it was going to be another Florida. And now it's, you know, Mar-a-Lago, whatever it was. Now it's changed. We will, you know, the rebuilding, what are you going to do with all these people, the prisoners? The prisoner exchange that was supposed to happen, you know, there were certain names, Palestinian names, you know, people like Barouti, who could maybe lead the Palestinians, who the Israelis don't want out of prison because they know that he can actually unite the Palestinians. And that was the whole purpose of Netanyahu funding Hamas through Qatar, so as to keep the Palestinians divided. I mean, you know, it's such a complex issue that I don't think it's something, yes, a new beginning. Eventually, there might be the corridor. People talk about this sort of whole Gaza corridor that, you know, that was supposedly the reason why all this started. I don't believe it. There's a lot of conspiracy theories. But when you have Trump and you have Tony Blair, I'm sorry, when you have Tony Blair involved in anything, you've got to really think about what the motive is. You know, what are they expecting to do in Gaza? And in the meantime, you need to disarm Hamas. Where are they going to go? I mean, it's so complex that I think, yes,
looking at it from the other side,
it's a good thing that Trump actually took interest and did something, because I don't think any other president could have put pressure on Netanyahu and forced him to sit there with a telephone on his lap calling the Qataris. So I think that was a good thing that he did. Whether it holds is another story.
Looking at that going forward, Carol, because on the sort of tangential sort of perimeters of that, there are things like sanctions, Iran, the dark fleet, the ability to curtail the not illegal, sort of sanctions busting in certain geographies, not in others. But when you take the full sort of parameters of this idea, where do you think there are intersections, or are there? Does Iran's sanctions get pulled back into focus now? Do other things like that, where actual oil flows become real, India starts to behave in terms of the G7 perspective of importing Russian sanctioned oil, etc.?
Well, you got my brain thinking, because you mentioned too many aspects, and we can spend hours on each one of them. But let me try to capture two things. But primarily, let's talk about sanctions and oil markets in general. If there is one lesson we learned throughout history of the oil industry, and I love to quote a court case from the 1800s, is that when they said that oil is like a wild animal, it will always escape if it finds an opening. And this is still the case today, because it's a liquid commodity, it's fluid, and it's very difficult to really track the molecules, especially when it goes through the processing and the refining and the distribution, etc. And so far, we have seen that the sanctions do have an impact. We cannot underestimate the impact of sanctions and say they are completely ineffective, because, for example, whether Iran or Russia, they are being forced to sell their oil at a discount, and therefore generate less revenues than they would have otherwise gained if the sanctions were not in place. So sanctions do have an economic impact, and the pain becomes more felt over the longer they stay in place. And we look at the Iranian economy, right? And the situation there, it's not enviable. It did not collapse, but it's not really healthy. I wouldn't want to live there under those conditions. But in terms of their impact on oil flows, actually sanctions are ineffective in terms of stopping the oil from being traded in the global market, whether directly or indirectly through the dark fleet, through, some sophisticated ways to get the oil around. I mean, Iranian oil, I don't think it ever left the market. Maybe we had some losses, some constraints, that's at least what the numbers tell us, but we don't know what happens behind closed doors. We don't know how those molecules really get to the market. And this is primarily because it's not like the international community is coming together to squeeze one country. The world is divided between Western powers and Asian buyers. And Asian buyers, they are not small buyers. They are the biggest importer of crude oil in the world. And they have been in this business for decades. So them and the countries under sanction, whether Iran or Russia or Venezuela, they have developed a sophisticated web of getting that oil still to the market. But of course, it is at discounted prices, and it does have an economic pain, but not impacting the trade flow, redirecting the trade flow.
Malia, just picking up on that idea, I mean, we see quite often, I mean, the Middle East, where we've lived a long time, and Kate and Carol are from. They've articulated throughout their lives, this has continued to be a continuous series of crises, and yet the oil flows, and the world gets its hydrocarbons as it's needed. But I'm wondering, when I take the same analogy to the China-US face-off, can we continue in a similar way, where it just keeps on going, and I hate you and you hate me, and here's 5% and here's 20%, and next month it's no, I love you, and it just does it have to come, do you think, or will it come to some kind of concrete sort of new dawn, whether it's not GATT, it's not WTO, but it's some new T something, it's a deal done and we move into a new age? Or does it continue? Can it continue in this, ongoing tit for tat, but actually never resolving itself? Cold War-ish.
I think it's the latter, because China, we know, are very good at playing the waiting game. I mean, the US administration can change in the next 4 years, right? We could have the Democrats back in power, who knows? And China, even looking at the trade war 1.0, China did the same thing. So we think this is delaying it out. what China is doing in the background is they have been reconfiguring their system to be less energy dependent on the world matter. So I think, while the US is sort of talking about all these sort of short-term issues, and we know Trump is trying to trade the US hegemony and sort of, destabilize the BRICS to get the power back, China is getting closer to India and Russia and becoming energy independent from semiconductors, from rare earth minerals, all the sort of, helium, for instance. I was reading a really good article about the importance of helium. So they're being very strategic, and I think they go.
And it's cut half its holdings of treasuries from
exactly, and they've got gold,
1.4
right?
trillion
So,
to about 800 billion.
absolutely. US right now, the foreign central banks own less treasuries than they do gold right now. So you're absolutely right. I think the fact of the matter is the US knows that they can't completely cut off from China right now, and China knows they can probably slow. So this is going to go on and on for longer. At some point, let's not forget, Trump always talks because US bond market is the most precarious part of the asset class. If you get any sort of nervousness where yields went above 5%, we saw last year, again, the first half of this year, Trump always chickens out because don't forget the US massive debt issuance. We have to raise about 1.5 trillion in the next 3 months. They need buyers, which is why he has a Genius Act, stable coins. They need the US bond market, the back end, to be supported. And I think that's why he sort of flexes his muscles, where he sort of nervous in the US bond market, he pulls back. So we think it'll be a lot of back and forth, but they don't have as much leverage on China as they think they would have, and China vice versa. So they're playing this game, right? We've seen Europe sort of, giving in to the US demands because, Europe is completely dependent on US LNG and exports. So it's a very different matter altogether.
Well, I suppose one needs to keep an eye on, disagree Trump's new beginning by an overwhelming cynical view, I suppose. Well, reality tells us, history tells us that, the Oslo Accords, let's keep an eye on gold and silver for the sort of truth in the market. I mean, Bitcoin's out there on the perimeter as being obviously another red light flashing moment, but gold doesn't stop. Now at 4,100, silver $50, record highs every day, and no matter what the noise anywhere else is, that market is telling us that there's something very serious going on, and no matter what the headlines, that keeps marching on. So
Sean, that just goes back to the US debt, right? Because the US is printing more money at a time where debt is, they're inflating the debt away. So it's all about inflation and hard assets. And that's why gold and silver are outperforming every single asset class today, because that is a true inflation hedge. Bitcoin is a digital gold, but it's a very risky lever play. So that has a volatility, but gold is your true inflation hedge, so to speak, and fiat currency debasement. Our money is becoming paper money as we talk about it. So how do you protect your capital? And that's why money is flowing into gold.
Well, somebody told me many years ago that an ounce of gold in the history of time and to this day should be able to dress a gentleman. And that's what it costs about to dress a gentleman these days, $4,000 and growing by the day. Shoes, my God, they're crazy prices these days. So dress a gentleman, that's the reference. But these three beautiful women don't need any dressing because they look amazing and their brains are even bigger than how do they look. So thank you so much, Dr. Carol Nackley, Maliha Mangali, and Kate Durian. Really appreciate your time today. Safe travels wherever you are. And yes, I agree. The next forum should be in Italy, at least a virtual one, if nothing else.
Brilliant.
All the best.
Thank you very much.
Thank you very much.
Bye-bye.